Last week's FOMC triggered some major breakouts for markets. So in today's SMC Outlook, I'm going to give you a complete roundup. We're talking about the US dollar, the euro, the pound. I've got some commodities in there with gold, silver, and oil, and then wrapping up with some crypto charts with Bitcoin and Ethereum. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So guys, let's start with the DXY. We have a lot to talk about today, and I want to spend some time on the DXY chart as I always do, because I always say if you can get the dollar right, you can get a lot of different charts right. Okay, so we do have to spend some time here because there is a lot to consider. Now, you can see here where on this Thursday candle, we had the DXY giving us the highest daily close in 13 months. So we have to go all the way back here. Okay, so all the way back here toward these highs back here in May of 2025 to find the last time the DXY closed this high on the daily time frame. And if we go to a weekly, we'll talk about all these levels you see here. But this could be potentially the highest weekly close that we've had since that same time. Now, I say potentially because I am making this a little bit early on Friday, so we do have some hours left in the session. So it's not final just yet. Okay, but as you can see, we are starting to clear some of these highs from back here. And this has been a range that the US dollar has been in for a very long time. We have to go back to really 13 months, right? It's been an entire year of the US dollar going sideways. However, what I have maintained now for months, if you've seen recent videos, okay, and I got called all kinds of names. I mean, people disagreed with me, and we're not out of the woods yet. Nothing says that the dollar is going to move higher or even, likely here, because this isn't final just yet. But what I've talked about for months is that when you look at the structure here, right, we had the BOS down here below the lows. Okay, so break of structure below here, very clear. We also had a change of character up here, and this was confirmed on the euro with a close of over 50 pips below its respective low. So this was a bullish change of character, meaning that on this pullback, and we talked about all this at the time, but this back here was an inefficiency for the DXY. And on this pullback, I was looking for a higher low to develop, and that's exactly what we've had so far. So this is nothing new, guys. We've talked about this now for months, or at least I have. I know a lot of people were bearish on the US dollar, especially with everything going on in the Middle East, how, the petrodollar and the dollar's dead and all the talk and everything else. I maintained that the US dollar was bullish during that time. Okay, so let's look here now at the 4-hour time frame. In fact, you know what? Before we get to that, I want to talk about this on the weekly and even monthly charts. And also, by the way, guys, if you find this content helpful, hit the like button and also leave a comment below. It literally takes 10 or 20 seconds to do it. It takes me hours to make these videos, so I really appreciate it when you do show your love, because these videos do take a lot of time to make. So monthly time frame, we've talked about this channel here going back to 2011 before. So really, really clean stuff here from the DXY ever since 2011. And you can see where we are coming off of this support area. Now, on top of that, we also have this descending channel giving us a confluence of support down here. So this combined with that daily change of character that we looked at, this is exactly why I've been saying that really getting bearish on the DXY through here really made absolutely no sense to me, at least on the higher time frames. Okay, so right now, obviously you can see here, we have the lows back here and we have the highs up here. And this is where, again, people will look at this and they'll say, well, this is resistance and therefore I'm going to short the US dollar. And here's the thing. Yes, okay, this is a key level through here, but a couple of things. First of all, again, we are holding above the top or the bottom of this channel here. And additionally too, okay, three things in fact, we're holding above this level. We have this inefficiency right up here off of this low, right around 106, which is also the top of that descending channel. Okay, sometime over here later in 2026. And then on top of that too, a level like this through here, like these lows and these highs, if you're just blindly shorting from a level like that, you're going to lose more often than not. And that is not a viable strategy, okay? If you're going to use a key level in the market, you've got to look for confirmation. And guess what? If we go to a daily time frame, the only confirmation here is bullish. Okay, there's nothing up here right now. And again, the highest daily close in 13 months. There's nothing here to tell you that it's time to short, or tell me at least that it's time to short the US dollar. I can't decide that for you. But for me at least, okay, yes, we could pull back. Okay, looking at the 4-hour chart, we could pull back on the DXY chart. We've got the lows down here. We've got this high back here. You can see what we're testing, right? So yes, we could pull back from here, but this is not a time, in my opinion, to be getting bearish on the US dollar because there is no confirmation here. Everything on the higher time frame says that we are potentially moving higher. So with that in mind, I'm looking for buys on pullbacks only. Again, it doesn't mean we can't get pullbacks. Okay, I want to see a pullback. but I'm looking for buys only. And as a side note too, you can see that this back here was, we talked about this in Discord right here, which if you want to gain access to Discord, here's what you have to do. Sign up for that free SMC training in the description of this video. Then once you sign up to that free course, you will see the offer to join Discord. And in there, we talk about this stuff in real time. And this was the change of character that I pointed out on the 15-minute time frame. This back here, this change of character, this was going into FOMC last week. Okay, and you can see where right off of support down here, we had the change of character, and that is what actually triggered, okay, technically this move higher. Okay, so really for the week ahead, I'm doing the exact same thing. I'm looking for, if we map out now this low down here, up here to the high. Now, what you'll notice is that we've got these highs right back here. Okay, so this is technically going to be support. However, we do have this inefficiency back here. Now, the question though is whether we'll see the DXY pull back that far, because one doubt I have about that is that you can see we are closing, at least on the daily, above these highs back here. So I do question that if we close above all these highs back here in this area, if we'll see a pullback all the way down here toward 100, okay? And look, what this is going to come down to, as always, is what kind of confirmation we get on the lower time frames. So in other words, if the DXY were to, pull back from here, okay, and then from here do something like this and only pull back toward this pocket here and not all the way back toward 100, if we were to then from here get a shift, okay, on those lower time frames, then that could be all we get. Okay, so in other words, it's going to come down to the lower time frame structure on this chart here that will dictate whether we get a more shallow pullback down here into areas like this next week, okay, these highs that it's closing above, or we get something a little bit deeper, okay? But all in all, I am bullish on the US dollar. Doesn't mean we can't get pullbacks, but overall, I see no reason here. Daily time frame, change of character, weekly time frame coming off of this support, and then we've got, again, this inefficiency up here around 106, okay? So really higher time frames, guys, there's no reason to be bearish on the US dollar. There really hasn't been for a very long time. Okay, so moving on here to the EURUSD. So we know that we have the US dollar bullish, right? And so with that in mind, if we look at the daily time frame, we've also talked about this many times here, but you can see where we have the BOS back here, close above the highs, right? BOS, this was the external low. We closed below here, giving us that change of character. So ever since this time, I was looking for a lower high to develop. And specifically what I talked about, if you go back there and watch the videos, if you did watch the videos, then the area I was looking at was right up here around 118. And the reason for that is because we had this displacement. Okay, we had the inefficiency back here in this area. And then we also had an open gap. Okay, so if you look at this right here and you draw a level right off of this open gap, this was the close, right? Notice what we tapped into right up here. So that was the lower high I was looking for. And I've been shorting this, along the way. Okay, I actually had a short on last week that, again, we talked about in Discord. So if I head over here, I share my trades in real time. You can see this was the short taken June 15th, 3:28 p.m. This was the trade. You can see entry, stop loss, and my target. I even pointed out to this inefficiency back here. That was going into FOMC. That was Monday of last week, so ahead of FOMC. And this was the reasoning for it. We had this change of character up here. As you can see on this high right here, we never took out this one back here. Okay, so we never took that out. This was always in play. And my target in this case was this area down here, this inefficiency from way back here, okay, that I talked about in Discord. So basically I was shorting up here, okay, on that 15-minute shift. And then my target was this area right here. It actually wicked right into my target. Okay, so really clean setup here for the euro. Now, going into next week, in fact, the last video I made on this too, guys, what I talked about there was the potential for the bounce from down here. So you can see we've got these lows here. And so what I said is this area between these two lines, this is where we probably bounce. And as you can see so far, that is playing out. Now, as far as what we have happen next week, for me, guys, this is going to come down to, ideally, you can see the displacement right here. This is an inefficiency for the euro, as is this right here. So ideally, what I want to see is I want to see the euro tap into premium. Okay. Now, again, here's the question, right? You can see where this is the 50% level. And the big question is, we go back to the DXY chart, we have the highest daily close in 13 months, possibly the highest weekly close coming up. And the question is, will we see a retrace all the way up here for the euro before we see a potential, continuation of this downtrend? And, in a perfect world, right, we would get this up here. But I'm not as confident of this just because of where the DXY is trading relative to these highs back here. Because again, it kind of implies that we could get a more shallow retracement for the DXY and therefore the euro, possibly, maybe down here toward like 100.3 on the DXY, but maybe not as low as, 100. So in terms of the euro, right, that means that we could just get this up here, okay, and maybe not all the way up here for the euro. Now, I'm speculating, right? We don't know what's going to happen, but ultimately I'm looking for shorts only. And like everything else too, it'll depend on the lower time frame structure that we get through here as to whether or not this is all we get or whether we get up here, right? So I'll be keeping a close eye on this next week, guys. As always, I will update Discord members, but ultimately I'm bearish here on the euro, looking for shorts on strength only, okay? So still bearish here. And in terms of where we go longer term, really, you look at this structure, you look at the rounded top up here, this change of character, I've maintained for a while now, looking for lower highs. And in my opinion, wherever we are, like if we come down here pretty quickly, right, we could be looking at this low back here. If it takes a little bit longer, then we could be looking at this pocket back here as well. But ultimately, guys, I am looking for a potentially pretty significant drop from the euro as long as this structure maintains. And the same thing as far as the DXY, again, going back here toward the weekly, you can see this inefficiency up here, right, around 106. So we'll see what happens here, but I am still bearish on the euro. No reason to be bullish on this market. Only looking for shorts from resistance, but really looking for shorts from those inefficiencies, mitigations. So looking at the pound now, this is also what I talked about in the last video. We have the low back here, watching for a bounce from this level, which we got. Now, again, the question is though, do we get the pound moving, okay, all the way up here into this imbalance? Again, in a perfect world, even being a little bit more aggressive using this high down here to the low. In a perfect world, we would see the market come up here into OTE, optimal trade entry, right? Before giving us a short entry up here for a continuation of this downtrend. However, with where the DXY is trading, I'm kind of thinking that we may only get up here, okay? And again, I'm speculating there, maybe we get a bit higher, but in either case, confirmation is going to be key. Okay, in either case, there is no reason to guess because dropping to a 15, if we were to get, right, like here's the inefficiency back here. If we were to get the market just doing this next week and then giving us something that's very convincing like this here, this change of character, then that could be all we see. Now, if on the other hand, we get the market just giving us higher highs and higher lows up here toward this, then there's nothing to short through here, right? And now we're looking at this area up here, okay? So that's how I'm playing it. That's how I always play it. But right now, I am still bearish on the pound and looking for a continuation lower, okay? But I do want to short on strength. I don't want to short low like this. I can't short low. My rules say I can't. So I have to wait for some relief here to look for shorts on the pound. Now, the dollar Swiss franc, I do want to touch on this here quickly because even though structurally this market has just been sideways and really there's not a lot to talk about because stuff like this here, this is all just internal. So, you can't really call this a BOS and this right here a change of character simply because this was internal to all of this back here, okay? However, at the same time, what you'll notice here is that we do have this pair breaking out from a trend line that dates back here to August of last year. So this looks pretty significant to me, right? If you look at this on the weekly chart, you can see where we do have several touches off of this level. So we have this one here, this one, and this one. So a pretty significant move here from the dollar Swiss franc. Now, one thing, like I said on some of the charts, the question is, do we get the market pulling back toward inefficiencies like this here or something more shallow? And what this is going to come down to me, again, same exact thing, same exact concept. So what I would be looking for is, possibly a pullback down here into the highs, right? And then watching for a lower time frame change of character to get long, okay? So that could be something on like the 15-minute time frame. Again, same thing over and over again, where we're just getting, possibly the market pulling back here, lower highs and lower lows, and then, taking out a high like this, giving you that change of character. So this would be your BOS, this would be your change of character, and then looking for a long on that higher low, okay? So again, this will dictate whether we just see a more, shallow pullback down here in this area, or we get something a little bit deeper over here, right? So I'm not going to sit here and speculate on where exactly we bounce because I don't have to. It just comes down to where we get that lower time frame confirmation, okay? But all in all, like I said, I think looking at the weekly time frame here, unless something drastic happens in the next, 4 hours or so, then this does look like a pretty decent breakout here from this level. And what's interesting too is, one last thing here is that if you were to use this as like an inverse head and shoulders, then you could technically make the case that the objective in this case would be from this level up here down here to the lows. Okay, so just to have a little bit of fun with this, if we were to take this and move it over, so same exact distance, measure from the breakout point, you can see where this comes in. And oddly enough, look at that, comes in right here at this high back here and these lows. Now this is the weekly time frame, so this goes all the way back to late 2023 back here. Okay, so, is that a coincidence there? Probably not. I would say that if this holds up, then this is most likely where this pair is headed. Okay, now the key word there is likely. I don't know where this market's going to go, or any market for that matter. But this is, where we could potentially be heading. As far as where to buy, again, low time frame confirmation will be key. Now, last week for gold. So let's talk about some commodity charts here. What I mentioned last week, and this was another one that going into FOMC played out perfectly, was this here. So this level right around 43.33. This will vary a little bit depending on the feed you use, but this was the yearly open for gold. Okay. So what tends to happen is after a few months into a year, if you map out the yearly open for a market, okay, especially a liquid market like gold, what you'll find is that this will serve as support, as it did back here. Okay. Notice how we never closed below. We wick below, but we never closed below. And that's what's key for any key level. Okay. Now over here, we closed below. Now this going into FOMC, what I said last week was that this was the first, 2 weeks ago, this was the first weekly close below. Therefore, this was resistance. Okay. So even though we had a pretty aggressive bounce from this low back here, right? The fact that this was the first weekly close below the yearly open going into FOMC, it did look pretty bearish. Now, here's a little bonus tip for you guys. Okay. If we go back here and we look at this price action, right? We have this drop right here. And in fact, this is what I said in my videos. And I told Discord members the same, VIP members, the same exact thing. This right here was your BOS. Okay, so this was your breakup structure. This was the protected low that we were watching right around 4,300. If you go back and watch the video before FOMC, this is what I said was the level that the market had to take out. And so this right here, using this one simple rule is how you can sidestep all of this. So you're not just blindly shorting at this level. You can sidestep all of this, even this liquidity sweep up here by using this, where all you're looking for is a change of character below here, okay? And as you can see, we got it right here. So this was your shift in momentum. Now, what you'll notice is that once we got this, we had the retest right up here at this level. So not only did we get the change of character here, but you also had a potential short opportunity right there from the key level we were watching. And as always, guys, this is all stuff we talk about in Discord. I share trade ideas in here as well. And this was it. Okay, so right here, June 17th, you can see this was the change of character. This is the level I told members to pay attention to. I even drew an arrow right here to 43.33. And then you can see literally moments later, we had a retest up here. Okay. So that just goes to show you, and you can see two retests, two chances to get short here. Now this was during FOMC, so obviously a little bit risky there, but you can see how well this works. So you're not blindly shorting a level. You're waiting for a change of character to confirm the level is likely to hold, and potentially even using that as your opportunity to get short in this case. So right here, you can see the gold now, moving lower. So let's talk about next week. So you can see where this was an inefficiency back here, and there's no surprise that we see gold, bouncing here from this area. So oftentimes you'll see inefficiencies like this mitigated, and then the market will bounce a little bit. But there is, once again, no reason to be bullish on gold, especially with the US dollar doing what it's doing. So in terms of gold, looking at the weekly chart, right? I still kind of maintain, and this may be unpopular, but I'm still looking at this area down here between 34 and 3,500. You've got this inefficiency back here. Okay, so this was the displacement out of this range. And oftentimes the market will come back to revisit this. Furthermore, too, if you look at this on a daily time frame, and I'm not saying that the timing here will be spot on, but if you look at this with these two highs up here, so this high, and these two lows right down here, you can see where this comes in somewhere in July. Okay, so potentially, guys, if the US dollar stays strong, there is nothing to say that gold can't just trend lower. I mean, look at the aggressiveness back here. I mean, even on this move, pretty aggressive as well. There's nothing to say that we can't just trend lower down here toward this area. Now, again, I don't know if it's going to intersect right here exactly, But this is kind of my longer term target for gold as long as the US dollar stays strong. Okay. As long as that's the case, then I see no reason why we can't get down there. Now, as far as support for next week, though, you've obviously got the lows down here around 40.80, and then you've also got this pivot back here. So if you look at a 4-hour time frame, you can see where this pivot back here. Okay, so you've got 38.95, you've got these highs right back here, and then you've got this significant low. So this is also going to be support for gold on the way down. Okay, so a couple of levels here to watch. Again, you've obviously got the lows right back here, which buyers are going to likely defend that. Then you've got 38.95, and then get below that. Now you're looking at 34, 35, potentially 34 to 3,500 in that general region. Now, the only thing that would change my mind on this is if we were to now see gold get back above the yearly open on a weekly closing basis. That's really it, guys. I mean, this right here now, we're looking at our second weekly close below here, right? Barring a miracle in the last few hours. But we're now looking at 2 weekly closes below that yearly open. So 43.33, this general area up here, as long as we are below this on a weekly closing basis, then in my opinion, there is no reason to be bullish on gold. Okay, so let's move along here to silver, and same concept here. Okay, and once again, guys, I know this video is getting pretty long. If you're still enjoying this content and you're finding it helpful, smash the like button, leave your comment, and also, subscribe to the channel because I'm putting out videos like this every single day for free. So 5-day time frame. I shared this one last week before FOMC as well. And at the time, the market was up here trading at this, pretty close to 70. Now this right here on the 5-day, really, really clean and simple. Okay. This was clearly a support level. Now this is also silver's yearly open. And what you'll notice is that we got the retest here going into FOMC, and then we saw the sell-off. Now it doesn't look like much. However, this is a weekly time frame. Keep that in mind. So from this retest up here, down here to this candle low, okay, from last week, that was about an $8 move, or just over 11%, which for silver is a pretty significant move. Okay, and you can see there once again is the retest. Okay, so a little bounce here on Friday going into the weekend, but like gold too, like I said, I mean, it's not too crazy to see the market, fill an imbalance like this back here from this candle, this displacement, and then, give you a little bounce. Okay. So I am looking for shorts here, but only on strength. I mean, I can't chase this lower, certainly wouldn't chase this lower down here into this support area down here toward these lows. But I am looking for shorts on strength. So if next week we were to see a push up here into some of these imbalances, so looking at the, let's say, daily time frame, right? If we were to see something like a push up here into lows like this right here, then that could be interesting to drop down to a lower time frame to look for shorts. Okay, with targets of this low, and then possibly, I talked about this last week as well, and this is probably an unpopular opinion because everybody wants gold and silver to rally. But if you look at this on a log chart, especially going back here, this was 1980. This was the high from 1980. This was also a high from back here, I believe 2011 or so. And then this is a 46-year level, right? And so you can see the breakout back here, a lot of displacement on that breakout. And you can see where we're kind of rotating lower now to potentially come back here and test 48, okay? So this is really the most obvious level on this chart, possibly the most obvious level on any chart in this video or that I even talk about, because again, it is a 46-year level. And so this is going to be one that if we do see silver continue to rotate lower, in my opinion, this area down here is going to be one to really watch, not only as a target on shorts, longer term, but also potentially as a longer term buying opportunity if we get down here. Now, like everything, it's not just going to be a matter of if we see this just to go out there and blindly buy silver. You've got to wait for that confirmation that I talk about so often. Okay, so let's move along now to US oil. This will be pretty quick because really right now there's nothing for me to do. However, I am keeping a close eye on the 66 area. So you can see back here, this was the consolidation we got here. This was the displacement out of this range. This is back when, obviously WTI got really crazy. We went from like a $3 or $4 range to having ranges of like $30 with everything going on in the Middle East. So this is a confluence of support down here, and enough so that I will be watching for a buying opportunity down here. Again, it depends on the lower timeframes, though. I have to see that bullish change of character down here in this region in order to justify a long, okay? But I would like to see this inefficiency back here mitigated and the bottom of this channel tested. So what you'll notice is that off of these highs up here, I often talk about how markets love symmetry, and you can see this here with this high, these highs through here, this one, and then notice these two lows. So this comes in over here potentially sometime in July. Like I said, I don't really use this to try to come up with exactly when something will happen. It could be over here. It could be over here. However, I will go as far as to say that, I mean, look, I'm not going to sit here and say that this over here will, if you're looking for this whole MOU with Iran to fall apart, I'm not going to sit here and say that this is where it's going to happen. But I just think it's going to be interesting. Okay. Personally, I'm very doubtful of this whole MOU and this quote unquote deal, between the US and Iran. I think if it's going to fall apart, it's probably going to be somewhere over here and where you're going to see oil, potentially bottom here and then rip once again. But I could be wrong there, guys. We'll have to wait and see. And as far as targets, if this does happen, I could be getting ahead of myself, but pretty clear to see where the first target would be, right? You've got the lows back here, this low and this low. Okay. And you've also got inefficiencies on the way down. So basically looking for a change of character down here if we get there, and then possibly looking for, targets up here in this region. Okay. So let's wrap up with crypto, with Bitcoin and Ethereum, guys. I know this has been long, but there's a lot to talk about here with these markets. Okay. So last week, let's take a look at the weekly time frame for BTC. So with Bitcoin, this is also very similar to what we saw in gold and silver. You can see on the weekly, we have the market trading through here as support. We closed below it. Guess what became resistance? So this is what I talked about also going into FOMC. I made videos on this beforehand. And what you can also notice on the 4-hour time frame is we had some nice symmetry here with these highs and lows in the form of a possible bear flag pattern, which has really been kind of the theme of the last, really 8-9 months for BTC on the way down. Because what you'll notice is that on the daily, right, we've got two bear flags back here. These were much larger. You can see this right here. We got the breakdown and this one right here. Okay, so what is really interesting about this? And by the way, if you do want to see where I trade crypto and you want to get access to some deposit bonuses, then check out the link in the description below for that. Okay. So one interesting point about BTC, and I have the levels taken off here. I showed this in Discord, but one interesting point is that if you take this height right here, so from that high down here to the low, and then you measure the same distance from this high up here, you get an area roughly around 44K, okay, which is my longer term target. Now, what's also interesting is if you do the same thing here with this shorter term bear flag from this high down here to the low, take the same distance and measure from this high to a lower point, you also get mid 40K. So right now, both measured objectives are basically pointing to mid 40K for BTC, okay? And one reason for that is you look back here in 2024, we had displacement out of this range. Okay, so this was the inception point of that breakout. We had the market pull back. Now we didn't fully mitigate this around mid 40K. Okay, so on the one hand, you have this inefficiency back here that is yet to be fully mitigated. On the other, obviously, we have a downtrend for BTC. There's nothing here to be bullish about. We have lower highs, lower lows. We have, we have sellers in complete control, and again, holding below this level on the weekly. So basically the only thing that would negate this idea that we're headed back here toward mid 40K is if, and this could even be short term, like I'm not saying that if we do this, then this is off the table, but if we were to see a weekly close back above here, not necessarily this week, but over the coming weeks, if that were to happen, then we could get, more of a rally from Bitcoin up here towards some of these inefficiencies. But really, ultimately, when I look at this chart, guys, again, there's really nothing to be bullish about. I mean, don't tell people that on X about that because everybody's bullish all the time there. But really, I mean, there's just nothing to be bullish about. We're seeing lower highs, lower lows. We're holding below key weekly levels like this here. And again, as far as a target, just my opinion, but I think mid 40K is one to watch. Okay. If we get down there. Okay. And wrapping up with Ethereum here, ETH, we talked about this last time. And this is the weekly time frame. I know this is one trend line. This might seem a little bit light in terms of technical analysis, but again, it's not just one trend line. I've talked about tether dominance. We've talked about multiple factors there. I talked about Bitcoin, which by the way, tether dominance literally pegged the Bitcoin high last week. If you saw that video I made on tether dominance, it was perfect, right around that 8.2% level on tether dominance. So anyway, guys, this right here, this trend line, the fact that Ethereum is holding below here, this is what we talked about last time. And I do want to show this too. Here's the thing. A lot of people will look at this and they'll say, well, this trend line should be drawn down here. Okay. And yeah, sure. In this moment right now, you can make that case. But here's the problem with that is that back here, okay, in the moment, okay, so if we go back here, in this moment here, I would not draw this down here in this area because the key with a level like this and any level like this is that as long as the market isn't closing below, then it's technically valid. And in fact, a lot of times you will actually find that a trend line is more accurate if it's drawn across closing prices of higher time frame candles than the extreme highs or lows. And so you can see this low right here. Now, the confirmation, of course, is once Ethereum gets below here, is to watch how the market reacts. And this right here, again, is your confirmation that this level is drawn correctly, or at least that this is a legitimate level. You've got the low back here, you've got the high right here. Okay, so support back here, resistance over here. So the whole idea, the whole argument that this level is drawn incorrectly, in my opinion, that just doesn't hold water, because this level is correct. The market is telling you that it is correct. Okay, so just like with BTC, I don't have this all marked up because really the last few years for Ethereum has really just been a mess. But as far as targets, I maintain, I've said this for a long time, I maintain that we are probably headed back here toward this low, right around $1,000, maybe even just below. Okay, so that is my stance on Ethereum, very similar to BTC. I do think that we're looking at still a bearish market here. Now, one last thing too, before we wrap up on BTC, is you can see right here, we do have this kind of short-term pivot. So in terms of more of a short-term thing, this is just my opinion, not financial advice as always, but with this close right here below this area, you've got the highs back here, highs through here. We had the breakout, the retest of that weekly level, and then we close below. Okay, so off of this low, basically right around 64K, I think as long as we're holding below here, then we do have a bearish crypto market, okay? If Bitcoin were to reclaim this, then that could be different. But I think for now, as long as 64K is holding on the higher time frames, then I am looking for lower prices from Bitcoin and really the entire crypto market. All right, so that's it for today's video. I hope it helped. Be sure to check out that free SMC training that shows you exactly how I trade SMC full time. You can find it right here on the screen. Again, it's completely free. All you have to do is enter your name and email address to get access. So until next time, have a wonderful weekend, and I will talk to you again next week.